Yo, what is going on, guys? It is your favorite trader, the Master of Coin, and we are back with another video. Today we're going to be speaking about how you can do the correct analysis on any chart. You see, guys, it doesn't matter what instrument you're looking at. As long as it's got a candlestick, you can trade it the same, whether it's crypto, commodities, Forex, stocks, any single thing that has a candlestick, you can go to your department store and trade it. Right? Well, not department store. That was a bad joke. Anyway, what we're going to be speaking about today is how to do the top-down analysis when you are trading. You see, the reason why we must do a top-down analysis when we're trading, guys, is because we need to get context when we're analyzing the market, and we need to have agendas and narratives. That's the biggest thing. We have to have a narrative. You see, we can't just come to the market, go on one time frame, use one chart pattern and expect to get results. There's so many different factors. We've got supply and demand battles happening on every single time frame. If you don't know what supply and demand is, supply just means sellers and demand just means buyers, right? And on each time frame, there's an independent relationship between supply and demand. So you can't just isolate one time frame and say, oh my God, I'm going to stick on the 4-hour time frame and only trade this. Okay, let me know what your trading results are. Probably pretty shit. So when it really comes to it, guys, we want to incorporate a multiple time frame analysis when trading. Like, each single time frame, guys, has its own independent structure and supply and demand relationships. So we don't just want to isolate one, because, for example, just because you're seeing a 5-minute uptrend doesn't mean the market's going to keep going higher and higher and higher. You could be having a 5-minute uptrend to come into a higher time frame level of supply, so the market can be retracing. We do a top-down analysis so we don't get caught out on these certain moves, right? Just because the market's going higher doesn't mean it's going to create a new high. It could be retracing. Or just because the market's going lower doesn't mean it's going to create a new low. It could just be retracing. We have to be aware of all these different factors and create confluence to make trading decisions. You see, confluence just means multiple things coming together, pointing in the same direction. And being able to trade with confluence and being able to trade with doing a top-down analysis is going to put you years ahead. Absolutely years ahead. Again, most traders, when I got into the industry, I was taught to use a chart pattern. And I was taught to use one time frame and stick to that time frame and stick to that chart pattern. And I found myself, my account going like this. And it weren't fun. Let's be real. So what I'm going to do is save you guys the trouble, save you guys the blown accounts, and actually show you how to do top downs in the correct way. Now, the simplest way to do a top down is understanding this, that every single strategy, right, is looking for certain factors, right? And you have to be doing the same thing on each time frame. So if you're a supply and demand trader, right? If you're a Fibonacci trader, if you're a support and resistance trader, you have to apply the same sort of thing on each time frame. Me, I'm a smart money and Wyckofian trader. So the way I use top-down analysis is I'm using my higher time frames as a roadmap. And I can go on my lower time frame to now navigate this roadmap and get in and out of the market on the way to my destination.
This is a major key alert.
Let's hop into the charts. I'll show you guys some examples and we go and get this thing rocking. Now, before we do hop into the charts, guys, I want you to understand that I am no longer affiliated with any other academy apart from myself. I don't do any sort of affiliate marketing, none of that. It's fully me. If you guys do want to work, if you guys do want to learn how to trade, you'll be working with myself and no one else. So I just wanted to get that out there because a few people are asking if I'm part of any academies or anything like that. No, I am not. And I do have a mentorship program, yes, but I only take on a few students at a time and they have to meet certain requirements. So if you are serious about learning and working with me directly, then shoot me a message on my Instagram, right? My Instagram will be in the description. There's a lot of fake accounts, so don't DM any other account apart from the one that's in the description. And remember, if you do not hear my voice, it is not me, and the voice should be me, not some 40-year-old guy in some other country or you know what I mean. So let's get right into the video. The easiest way to understand top-down analysis is like using a map. Now you're thinking, why the hell is this guy bringing up a map when I come here to learn how to use the charts? Well, be patient, sit back, and we're gonna get to it. So let's just say we want to travel, right? Let's say we want to go from the UK, right, to Cuba. Okay, so if we want to go from the UK to Cuba, we have now got a destination, right? We've now got an end goal where we're going. So we can now deduce a route to get to that area. We can create a plan that's going to get us to that area safely. And relating that to trading, again, you need your overall higher time frame direction. Is it going up? Is it going down? Is it more likely to keep entering buy trades and then to play out? Or is it more likely to keep entering sell trades for them to play out? So you need that first destination, because I can't just say, look, I'm in the UK and I want to go somewhere, right? You can't just, you know what I mean? You can't just go to the airport and say, fly me anywhere. It doesn't work like that, right? For you to be able to get consistent results in the market, you need to have a consistent approach. You can't be trading one way tomorrow and one way the next day. You need to apply the same thing day in and day out. And if you're applying the same thing in day out, don't worry about a few losses. You need to lose. Every strategy should have losses. See, in my strategy, if I take a few losses, I ain't going to deviate, because I know I've got my end destination. I know what I'm looking for. That's the main thing. I know where I'm going. So a few little hiccups on the way to my destination doesn't mean anything major. You know, no one's going to have a perfect journey. Right, you're going to have a few hiccups. You know, for example, you may be late to your plane. You may want to leave your house at 2 p.m. and you may leave your house at 2:05. You may get caught in traffic. You see what I'm saying? So the first thing is you want to have your overall agenda, your overall destination, and you want to apply the same analysis on the higher time frame as the lower time frame. So let's say we go to the monthly, right? And just for this video, we're just going to look at structure and order blocks. So let's just say, right, on this chart, we can see we've got a low, and we've got a high. So we've got a bullish market structure, right? Very, very simple. So from there, we need to figure out, well, where we want to engage the market. And just to keep it simple, we're going to use this demand zone down here, right? And we can also, you know, apply, let's make it a little bit bigger just for the sake of this. But we've got our demand zone. Okay, so now we've got our demand zone, we've got our roadmap, we've got our destination. And that's like saying, okay, well, I'm in England and now I want to go to Cuba. So we've got our destination. Now, for us to actually get there, we have to go down a few different routes, right? We can't just say, oh, I want to go to Cuba and just magically appear there. No, we've got to go down the specific routes. So when you're going on the lower time frames now, so let's say you're going from a monthly to a weekly, you see how we're getting more data on the chart, right? So from this low, right, on the weekly to this high on the weekly, we have 153 candles. But now switching it to the monthly, we're going from 153 candles to 34 candles. So when you switch time frames, all you're doing is getting more data when you zoom in and get less data when you zoom out. You're compressing it. So people get confused when they go on the lower time frames. You're probably confused because you're on the lower time frame because you haven't gone through the higher time frame. You don't know the agenda of what the actual higher time frame market's trying to do. What we can do then is we need to figure out our exact route. So for example, right, we can't just say, again, I want to go to Cuba. We've got to figure out, okay, well, whereabouts are we in the UK, right? We're in London, Birmingham, Manchester, Glasgow, Edinburgh, right? Where are we? Once we figure out where we are, we can now figure out how we can get to that destination. So where we are now, well, we are obviously at this current area in price. Now, we don't just want to blindly come here and say, okay, well, I just want to short it here. I'm going to stops on the moon and, you know what I mean, just target down here. That's not how you want to do it. What we want to do now is apply the same analysis. What do we just do? Structure and order blocks. So we can look at our structure. We can see we've got our swing high, and we can see we've got our swing low. From there, we can look at our structure, right? We can also go on a higher time frame to see if there's any institutional candles, and we can see we've got this weekly institutional candle here and this weekly institutional candle here. We can maybe refine it a little bit if we want to, and then again go back to the daily and get more precise with it as well. And this is important now because doing the top-down analysis, right? We know we want to go down to this demand zone, but for us to come down here, we need to have sellers enter the market. So where can the sellers enter the market from? Well, we've got this clear downtrend. It meets the downtrend requirements, right? We've got our supply zones. Let's make them red for supply. So now we can start building a roadmap and say, okay, well, for us to get down there, supply has to come into the market. So we're either A, going to just redistribute here and go lower, or we can create an if-then scenario and say, if the market comes up to our supply zone and gives us our entry confirmation, then we can short it and take it down to our area. And that's all it is creating these if-then scenarios. Being able to navigate through multiple time frames, again, it helps you understand where you are and where you can go in the market. Because if we just drop down to a 5-minute time frame for a second, right, and we're just analyzing based on one time frame, let's say we're now saying, oh my God, we're in an uptrend now, you know, we've got our low, we've got our high, right, and we're just trying to look for this, you know, demand zone down here. Well, just using one time frame, a few things can happen. Either A, it's just going to miss this zone completely and continue higher, right? B, come into the zone and continue higher. Or C, it's just going to fail completely. Let's entertain the situation saying that it missed our zone and continues higher, right? Well, doing a top-down analysis prevents that because we've only got a 5-minute level of demand down here. But doing a 15-minute analysis, or maybe an hourly level of analysis, we have the higher time frame demand zone marked up now. So if it does go on and create a new high from there, well, we're not actually lost, and we can actually still, using other confirmations, still participate in the market using our lower time frame confirmations, because we was on the higher time frame and we saw the higher time frame demand, and then we just refined it with the lower time frame. You know, we can entertain another scenario. Let's just say, right, it just comes down and fully collapses. Well, why is that? Right, I thought we're in an uptrend. Well, look on the higher time frame, it clearly shows you're in a downtrend and you was actually counter trend trading, and because you're counter trend trading, it's a lot less probable. Of course, unless you know how to hedge correctly and you obviously understand how the algorithm works. Obviously, that's something I can't explain in this video, guys, because, you know, we'll be here all day. What I want you guys to do understand, though, is that everything's intentional. Like, every move, every pip the market moves, there's a reason for it, right? Every time you see the currencies move or stocks, there's a reason behind it. There's bigger agendas. There's bigger players that are controlling these markets and have certain agendas, again, to fulfill. So we can't just be blind to one time frame. We have to incorporate all of them so we can benefit. There's so many other situations which you can use multiple time frame analysis. So you can, again, use it to build that roadmap. You can also use it to get more data in the market and help understand your fractal nature in the market and understand that there's only a certain amount of moves the market can do. What do I mean? Again, the market has cause and effect relationships. It's never going to do something without a certain cause. There'll never be a random spike without a cause of that spike. And I don't mean fundamental narrative. I mean something replicable that you can see on the chart and be able to anticipate it actually happening so you can make money. There's a difference between hindsight and looking in the past and be able to anticipate what's happening in the future. And your ability to be able to manage risk and anticipate what's happening in the future is how you become consistent. Now, that's a combo for another day. I've got plenty of videos on that. But what I want you guys to understand is how important top-down analysis is, man. We can't just be blind to this. Like, there's so many ways it can benefit you. For example, let's have a look on Euro USD, right? There's a few situations from the week just went past. So let's look at Euro USD and I'll show you guys some examples of this top-down analysis. So if we do what most people do, you know, they're looking on one time frame. Last week, Euro USD, I saw so many people trying to buy it and send it to the moon, right? And because they saw this little breaker structure here, now it's a valid break, 100%, right? They saw this breaker structure, so you have your downtrend, lower low, lower high, lower low, breaker structure. Because they saw this breaker structure, they were so bullish and so many people were piling in buys. And so many people got wiped out because what happened next? The market absolutely tanked and took out all of the buy momentum from literally the 28th of April to 12th of May. Now, how could you have prevented that? Well, you could have done your top-down analysis, gone on your higher time frames and seen your higher time frame agenda. The fact that we've actually been distributing, and we've actually been in a complete bearish market cycle, and there's no signs of strength in this market. And actually, you go even higher, you can see that we're in very, very bearish conditions, high to a low, and we're actually coming to potentially take this low and maybe even head a lot lower in the market. See, this is why you do your top downs. You're not getting caught up on the minute by minute swings. Again, look, another example. Let's say you see in the market, you're trading, you see, okay, look, we've got a breaker structure. Okay, you know, let me buy here, right? Again, this is not how I would trade. I would not look to buy this, right? But let's just say, for example, you're doing that and you're trying to target, right? I see people trying to target to the moon for no reason. Now, of course, everything we do, target, stop loss placement, does have logic. So because people don't understand the higher time frame agenda that we're so bearish, people were now buying here, right? And this is what was happening, right? They were just stuck on the lower time frames. Price comes in, they're getting profit. They're getting so excited. They're getting so gassed. They're thinking about all their Lambos they're going to buy. And all of a sudden, boom, stop loss. Now they're thinking, what the fuck happened? I was just in profit. Like, what happened? I thought I was going to be rich. And now they've liquidated or, you know, lost that trade. I'm not saying that I have a 100% accuracy rate, no. But what I'm saying is this. Being able to do a top-down analysis stops you from taking stupid trades and low probability trades. You see, I would rather take 2 high probability trades, lose 1, win 1, instead of taking 10 subpar trades and having a lot more losses. For me, look, I want to trade smart, not often. I want to be a sniper in the market, not a machine gunner in the market. It's all a game of probability. Why do I want subpar setups? So why we do these top-down analysis is it gives you an extra dimension to your trading. You're not just blindly looking at chart patterns and blindly looking at one thing. You'll be able to understand the agenda of certain movements. You know, you're seeing that, okay, let's say for example here, right? Another example, so many more people, they're thinking, oh yeah, bullish market, bullish market, bullish market. Again, failing to zoom out and realize that we literally are just coming into a higher time frame level of supply, so they're being blinded. This is the thing, guys, like the market is designed to entice you into certain things. We're in a society now with instant gratification where everyone wants things quickly, right? People don't want to wait a few days for a trade anymore. People want to be in and out of the market now. Not to say that's a right or wrong way of trading. Nothing's right or wrong. End of the day is, are you making money or not? If you're not making money, you're doing something wrong. If you are, you're doing something right. But what I'm saying is this: you're going to stop having so many stupid trades. Like when you start doing a top-down analysis, you'll be able to make sense of things. Again, it's not going to blind you from being stuck to one side of the market. For example, when GU, right, started to rally back in 2020, cool, we had a bull market, right? We obviously had an uptrend, but we don't want to get blinded by these uptrends and be looking at super moon targets without having the higher time frame agenda. Because so many people, again, back in 2021, April and May, so many people were still trying to buy when it was coming into supply. Well, where's the supply? Well, again, this way, do your top down. You start on your higher time frames first, you don't have these problems. So then you can see the fact that, look, we're in a very, very, very bearish market. And then when you're seeing, for example, the market start to break some of these structure points down here and start to trend to the upside again, right? You have an agenda, you have targets, you have areas to get out of the market, because you know where it's going to. All the market is going to do is go from one zone to another zone. That's it. That's literally all it's going to do, right? This zone to that zone, this zone to that zone. So being able to have the higher time frame zones, you can map it out, and now you're just playing ping pong, waiting for it to come here, waiting for it to come here, come here, come here. And that's literally it. Just keep it simple. This also helps you train your eyes with the fractals, because let's say we just go on the weekly for a second, right? And we look here, we have just one leg to the downside essentially. What this can also help you do is get familiar with the fractals as well, because sometimes we see certain breaks of structure on certain time frames and we get confused. Again, it's all about building a narrative so that you can build confluence and have multiple pieces of data pointing towards the same thing so that you can get the higher probability trades. And again, you can help train your eyes to fractals. So if we look on the monthly, we just have one push, right? And we have how many candlesticks, right? On the monthly, we have 12 candles. But when we go down to the daily, we're getting more data, just like Google Maps, right? Saying, okay, I want to go from England to Cuba, right? That's the journey. But when we zoom in and figure out, okay, well, where actually do I need to go now, right? If I'm in Sheffield, I have to go from Sheffield down to London to go to the airport. I'm not in Sheffield, but you know what I'm saying, right? I got to go there to the airport. Now I'm at the airport. I can fly to the Cuban airport. Now from the Cuban airport, I can get to my area. So what it allows you to do is navigate the market with a bit more ease and understanding. So look, all we're doing is zooming in, going from the monthly, right, one leg, to daily, multiple legs. Went from a few candlesticks to over 249 candlesticks. We're just zooming in. Remember, higher time frame, UK to Cuba. A lower time frame, okay, where am I in UK? Okay, I'm in here. I have to go down this road to this airport. And if you want to keep zooming in, you're just figuring out the exact routes and the exact turns you got to take, because you're just getting more data and looking more in. But you can't just say, okay, look, I'm in Purios Marston and I want to go on holiday. Well, okay, well, where do you want to go? You know what I mean? You can't just go somewhere. You have to know where you're going to go. And then, now you know where you're going to go. You have your destination. You can now navigate that destination with ease because you know where you're going and you're aware of maybe the obstacles as well. You also know, okay, what routes not to take and what routes to take as well, because you know your actual destination, right? If you, again, if you want to go Cuba, right? You're not going to start flying all the way over to Russia. Doesn't make any sense, because you have your overall narrative. That would be like, for example, being in a downtrend and trying to buy the market. Doesn't make any sense. If I'm trying to go Cuba, why the hell am I going to fly to Russia first? No sense, right? And if you're Russian watching this, no offense, but you see what we're saying with this. You need to make things have to have logic, and that's where your confluence comes in. And that's why I trade the way I trade, right? I'm not trading fabricated patterns or trend lines. I'm trading with market facts. So yeah, guys, I always do top-down analysis, man. Every time I analyze, I always like to do it because certain things can change. Just doing another top-down analysis may prevent you from taking a stupid trade. You know, you may be trying to, for example, buy the market down here for whatever reason, but because you've done your top-down analysis, you might realize, wait a minute, it's not even probable to be buying down here. I may as well just stick with the momentum and follow the trend. Instead of taking a subpar setup, let me wait for a high probability, high quality setup. Let's just say you're seeing certain levels, you're seeing the market trend. Now, let's say this is a 1 minute time frame. Let's say it comes down and breaks below your low, right? On the 1 minute time frame, it may close a body down here. But being able to step up to the 5 minute or the 15 minute, if this now closes a wick here and the body's all the way closing up here, well, chances are now the intention is not really to go lower because we haven't sustained price action below that area. Not a lot of bodies to close down there. And that can stop you from taking certain trades. You may be realizing by doing that top down, what it actually did, it just grabbed liquidity, mitigated a higher time frame institutional candle, and now it's continuing higher. And now you're sitting there trying to sell it. You got clapped there and you got clapped there because you didn't do your top down analysis. You wasn't aware of all the different levels and all the different possibilities of the market. We can't be one dimensional in this thing. We can't just be, oh, I want to do this and that's it only. Of course we have a narrative. Of course we have a probability of, okay, it's more likely to go lower. And now we've got a higher time frame narrative. Remember, it's going to take a longer time for them things to change. Let's say you're looking on a daily time frame and you're figuring out that it's going to go to a certain price point. You can now go on the relatively lower time frames and intraday trade your way down to that zone, getting in more and more entries, whether that's re-entries or just smaller trades. Again, guys, top-down analysis is so important. It will stop you making stupid mistakes and it will give you a greater awareness of the market. So when you're doing your top-down, remember, use the exact same approach from the higher time frames as the lower time frames. Mark up your supply and demand, mark up your structure, figure out your narrative. And from there, you want to have confluence to have multiple things matching. Because let's just say, right, your higher time frame is bearish, right? We've got a higher time frame is bearish. And we've got agenda that, you know, the market can eventually be going all the way down here. Okay, higher time frames to the downside. Now, if we're seeing a 15-minute breaker structure, for example here, right? Well, we're probably going to be a lot less inclined now to take this buy position because, well, not only is the daily super bearish, but, you know, our 4 hour as well is super bearish. So we've got time frames showing that the market's lower, 2 time frames showing the market's lower, but 1 time frame showing us the market's higher and we want to buy. It doesn't make any sense. Why would we try and buy the market when only 1 time frame's going up? For me, look, if I'm seeing 2 time frames down, smiley face, right, and 1 time frame up, well, the probability is that the market is probably going to go lower because there's more forces and more confluence for the market to go to the downside. Now, obviously, I don't just check the 4 hour, right? I go through every time frame, right? And how I personally like to view them is I like to categorize them. So, like, for me, the weekly and daily class is my higher time frame. And I want to see out of the weekly and daily, there's not really much difference in a weekly and daily, you see? And then from there, I'll mark up my supply zones, mark up my demand zones, mark up my structure and deduce what's my narrative. So if my narrative here is that the market's going lower, okay, I want to target this low. Cool. My higher time frames to the downside. Now, let's say I go to my intraday time frames, which for me is 4 hour, 1 hour, and 15. I can now have confluence for these 4 hour, 1 hour, and 15 time frames to the downside. Like, for example, here, when our 4 hour, 1 hour, and 15 minute break structure over here, well, think about it. Our daily's to the downside, but our 4 hour hourly is to the upside. Not probable. Let me set out the market. Oh, once we start breaking to the downside again, okay, now it's probable because our higher time frames to the downside and our intradays to the downside, we've got more probability of the market actually going in that direction now because we're creating if-then scenarios and we're waiting for multiple time frames to show us that scenario is actually going to play out by doing what we want. And what do we want? Well, that's where your rule set comes in, and that's where obviously your back testing comes in and creating that trading plan. Like the way I trade, I have a very specific set of rules that I follow. Like the way I enter positions, there's no thinking involved, right? I do this exact same thing day in and day out. It's a system. Save yourself serious time, energy, and money. Requires no thinking. I just go to the market. I haven't got to think, oh, do I take my profit here, take my profit there? I have levels that I know based on my trading plan, based on my data collection, these are the areas I should be looking at. Where's my stop loss going to go? I'm not going to put it in a certain area based on luck. I'm going to have it in a very specific place. Same with my targets, same with my partial profits, same with my entries. Everything's methodical, everything's thought out and predetermined. So what I'm saying is this. When you're trading, guys, you want to have that overall plan. And to be able to create a plan, again, like think about it, right? If we're going into war, right, we need the map, right? You can't just say, oh, I want to go all the way over here. We've got to figure out, you've got to plan out where you're going to go. You know, if you're in war, you've got to plan out where your troops are, where the enemy troops are. You've got to be aware of these different things. You know, if we're going to war, let's just say UK is going to war with some aliens, right, in the North Atlantic Ocean. Okay, well, whereabouts are these aliens, right? If I'm got to go down this path, let's say the path is straight here, Well, is there any alien bases on the area? We see where we're going, right? Is there going to be any interception in the area? We have to be ready. We have to be prepared. And if we're not doing that top-down analysis from that aerial view, we won't be aware. If we're just going straight on the boat to that zone, we're going to get messed up, bruv. So top-down analysis, guys, it gives you perspective. It gives you the heightened awareness because you're having that, you're zooming out and then you're zooming in. Don't forget to zoom out and zoom in, guys, because again, you may get caught up with the intraday stuff, man. You may get way caught up with that intraday stuff, and you don't want to get caught up with that, man. So with that being said, guys, that is going to conclude this video on how to do top-down analysis. Now, of course, there's only a certain amount we can fit into one video, guys. Otherwise, we will be here for days and days and days and days and days and days and days. Of course, if you do want to learn more about how I trade, how I get the sort of trades that I have taken, again, if you've seen my FX book, I do post results on there on my Instagram. Feel free to check it out. And I do have a mentorship program as well. So if you do want to learn, you do want to work with me, feel free to reach out. If I have enough spaces and if you do fit the requirements, then we can have a chat and see what's possible. Remember, if you do not hear my voice, it's not me. And with that being said, family, don't forget to comment. Let me know what you liked, what you learned, and I'm going to see you guys all at the top from the top because the bottom is way too crowded. Sheesh.